I'm going to be giving you the full breakdown of the ICT Silverbullet strategy that made me pass my first ever funded account of $3,000, as you can see right here. But now I'm going to be showing you exactly the process that I used in every single trade to go through it. So let's just get straight into it. First thing you need to do is only trade within the 7 to 11 London kill zone. Okay, this is the time frame where we're going to be destroying the market. So if I mark this out from 7 right here until 11. So this is where we're going to be taking our entry. Anyway above that, anyway out of this area, sorry, we're not going to be taking entry. So if I play price forward, we're going to be waiting for price to actually take out Asian sessions highs or lows. You can see we have the highs right here. This is Asian sessions highs, and this is the Asian sessions lows. We're going to be waiting for price to actually take out one of the two, and then we're going to be trading the reversal. Okay, so this is what I mean by the liquidity grab. Then if I play price forward, you can see that price just swept the lows right there. We're going to be putting this here. You can see it swept the lows. If I take this marker out, you can see how low it's gone. Okay, so what we need to do now is actually find a market structure shift towards the upside, and then we can start looking for a high probability fair value gap. Okay, if I play price forward, okay, there we go. We have a market structure shift right here of this high. This high has just been swept right there twice even. Okay, so after this, now all we need to do is look for a high probability fair value gap. With the indicator that I have on is actually marks out the actual fair value gap that I need to use, so I don't need to do anything. Okay, if I play price forward right now, I'm going to be showing you the fair value gap. We have another market structure shift here, which is just more confirmation. Play price forward, another one right here. We're going to keep playing price forward. We got another sweepish here. So now what we need to do is actually look for the market structure shift. So we have a good market structure shift right here of the highs, and actually we have a good fair value gap right here, which I'm going to be marking out. But just before that, I need to show you this one-time full payment guarantee, my Forex family, which is the exclusive community of only traders who want to trade under me, and I will teach you exactly how to become profitable and pass all of your funded accounts. Okay, no EAs, nothing, no bots. I'm going to be teaching you the ways, and you're going to be passing your first funded account within only a month. Once you join, you get access to my Discord, you get access to a secret, better trading strategy that I don't teach on YouTube, and you get access to a full course of 20 plus hours of videos. Also, I do weekly calls and sometimes daily calls for people, which I do live trading on, and I give you my psychology secrets. But anyway, make sure you join because it's increasing to $99 tomorrow, and I don't want you to miss out on this. But anyway, let's get straight back into the example. So now we have this market structure shift and a fair value gap. So all we need to do is mark this out from here to here, and this is going to be our FVG, right? This is all we need to do now. So once price actually goes back into this area, I'm going to be actually putting my stop loss below here, and my take profit at least a 1 to 3 risk reward ratio, like that. Okay, so once price actually re-enters this area, just like it did here, this is going to be our entry point. All right, so we've just entered, and now if I play price forward, you can see it's going all the way up, and this is the high probability fair value gaps that I was talking about. It's highlighted in blue. But anyway, if I play price forward, you can see it's going all the way up, and it's just smashed TP. Okay, I'm going to be showing you 2 more examples, so make sure you listen very carefully, but the 2 more examples are going to be way more complex than this one. This example is way more complex than the other ones. Make sure you still are listening carefully. Okay, we're going to be doing the exact same thing that we done in the other example. So first of all, we need to mark out our time zone from 7 until 11. This is going to be the area where we're going to be only taking trades in. We won't be taking trades out of this space right here. So what we're going to be looking for now is where price actually shifts to and where it actually sweeps the liquidity. So if I mark out my liquidity right here, this is the highs and this is the lows. Okay, this is the lows right here. Right, so we're going to be just looking which way price takes out, and we can see that price took out the highs. Now I'm going to be removing the low line. Okay, so what I need to do now is find a market structure shift towards the downside. So anywhere around here, this will be a market structure shift. So if I just play price forward, you can see it hasn't reached it yet, and it still hasn't reached it. Okay, so now you can see that another low has just been created right here because the candle before it and the candle after it did not go below it, which makes this a new low. If I just mark this out right here, this is our new low that we're going to be targeting. You can see price does not actually sweep that low. Okay, but you can see that we actually have more lows in the making right here. So this is the fractional low because the candle before it and the candle after it did not go below it. You can see right here, I'm going to just mark it out for you. So this candle right here and this candle did not go below it. If it did go below it, this would not be counted as a low. So what we need to do now is actually find a fair value gap, sorry. That's all we need to do. Just find a fair value gap, right? So I'm just still looking for a downside fair value gap right now. Still looking, and there we go. We just found one right here. Okay, you can see this is a big fair value gap, and I'm just gonna be marking this out with my rectangular tool right there. This is gonna be our FVG. Just lay this right here, and I'm gonna be just selling or short in this area, and I'm gonna be putting my stop loss just above this fair value gap candle, and putting my take profit all the way down to a 1 to 3. Okay, so right there. Now all we need to do is actually play price forward, and it's going to be entering. It just entered right here, you can see. Now for play price forward, it just smashed take profit, and it's gone way more below. Okay, you can see that. So this is the 1 to 3 right now that we just taken. We could have easily gotten a 1 to 7, all right? But we just always cap out at 1 to 3 because this strategy is very good, and it has the highest win rate at 1 to 3 risk to reward ratio. I'm going to be showing you the last example, but this one's going to have the most value in it, and I'm going to be giving you a very special gift at the end of this video, so make sure you're watching until the end. This is the last example which will have the most amount of value. But just before we get into this, I have a free Telegram page, and I also have a free Discord which I just post results and proof of my trades actually working and people actually getting past accounts. Okay, you can see right here, one of my students has passed this account. This is all in my private, and you can see the testimonials right there. You can see this was me just the other week. I made lots and lots of money. Okay, so make sure you actually join them. Both links will be free, and you can join them, and it's going to be the first links in the description. But let's just continue this on. You can see that now we're going to be marking our trade times from 7 right here until 11. Okay, so once I actually mark this out, we're going to be looking for price to sweep the lows or the highs of Asian session. So this is the lows right there, and it's going to be the highs. Okay, for play price forward, we can see that the lows have just been swept right there. Let's remove this. You can see the lows have just been swept. Now all I'm going to be looking for is a market structure shift. Okay, play price forward and forward and forward. Now, okay, we have a high right there that was created. Now we're going to be looking for this price right there to be, market structure shifted. Okay, so there we go. We just had that big engulfing candlestick that just took out this high, which is another indication that now we need to be looking for the fair value gap. And now all I'm doing now, looking for the FEG, and there you go. We just have you can see the blue area right here, which means it's a high probability fair value gap. This indicator works so well, and it's also within my Telegram and Discord, so you can actually go get access to it there. But now all we need to do is mark out FEG from this, and I'm going to be long in this position, placing my stop loss just below this, and my take profit at 1 to 3 risk to reward ratio. It's going to be such a good trade, and all I need you to do is watch carefully. Okay, so price is going to mitigate this area right now. You can see it's just very good candle. It's went in and another candle, but now if play price forward, you can see it's going all the way up, and it's just smashed take profit with very high momentum. Okay, it's just smashed take profit so well. All right, this is all you need to do. This is the full breakdown of the strategy that I've always been using, and I keep on using to pass all of my funded accounts. Make sure you start using this, and that's going to be the end of the video. Okay, but take care.